Welcome back. Shoppers across the country are hitting the malls this morning to cash in on big deals for Black Friday, despite a period of tight spending and lowered consumer confidence. A new survey from JLL Advisory Services shows a majority of consumers are cutting their holiday budgets this year by roughly 10%. A recent Fox News poll confirming similar trends. 47% of Americans are spending less in general this year for the holidays. Joining me now is JLL Advisory Services President Naveen Jaggi. Naveen, great to have you and good morning to you. Let's talk about Americans spending, the environment right now. Why are they projected to spend less this holiday season?
Well, there's a tale of two consumers out there right now. Actually, the top 10% of American consumers are planning to spend more than they were last year. They're driving about 50% of our U.S. economy. So the top 10% continue to do well. It's the bottom that aren't doing as well. And I think that's probably a reflective of the fact that in an uneven economy where you feel like the job market is softening, they're just not sure if they can spend as much money as they'd like. Now, we have a very high discretionary income in our pockets because we're not buying homes and we're not buying cars. But in spite of all that, they're just not confident enough right now to go spend the money they want to do. And so as a result, they're holding back for sales. We expect more sales and more promotional shopping to be done in probably the last 2 weeks of the holiday season than we've seen in past seasons.
Really, in the last 2 weeks of the season, because the week before Black Friday, I was seeing promotions saying, get your Black Friday price now. I mean, it had started earlier than I'd ever seen it.
Yeah, well, it just started in October, and I keep getting these emails from so many retailers that I track, and I wouldn't be surprised we'll see those things all the way up till December 24th. We've got a very short holiday season to keep in mind. So with only about 25 days of the holiday season relative to in the past when you have like 30 or 35 days, you're going to see a lot of sales starting early, and I wouldn't be surprised if we see those sales going all the way until December 24th.
And that lower-end consumer that you're talking about, they've seen roughly 1%, an uptick of 1% in wage growth over the course of the last year or so. What would it take for wage growth to push that consumer into a more comfortable area? How much more wage growth would we need to see?
Well, we need to see wage growth at a better rate than the rate of inflation, and we're seeing some signs of that right now. And I think what we need to see is a stabilization of that rate. So the PCE rate right now of 4.5 to 4.6% right now on personal consumption expenditures, that being higher than inflation helps. But seeing that spread between 2 and 3 points is what we need to see in 26. We are seeing indications of that happening. A very strong equities market right now supports that expectation. So I wouldn't be surprised if at this moment we see a better environment for our consumer in the spring of 26, but we need to see the market continue to do what it's doing right now.
Okay, and of course, President Trump is pushing his affordability agenda, celebrating lower prices and the American economy heading into the holidays. Watch.
It's a great time of the year, and our country is doing really well economically like we've never done before. We have $18 trillion being invested as of now. And this Thanksgiving, we're also making incredible strides to make America affordable again. Walmart announced that the cost of their standard Thanksgiving meal is 25% lower than just 1 year ago. That's a big deal. According to the USDA, the price of Thanksgiving turkey is down 33% from its Biden era highs. Potatoes are down 13%. Ham is down 15% compared to last Thanksgiving. So we are down to a level that we haven't seen in a long time.
Investors optimistic on upbeat economic data this week. September retail sales up 0.2% month over month and 4.3% year over year. Naveen, what's the state of the American consumer in this regard? I mean, some of the prices are coming down and they can feel it. There are other things that the administration has said, look, we got it. We're working on it. Just, be patient.
Yeah, I mean, certain elements of the economy that just haven't come back, if you will, to what consumers feel is a safe spot. On the one hand, rent and occupancy and housing are still high. On the other hand, we're starting to see gas and utilities stay flat. So depending on what side of the economy you're looking at, there are some areas where they're still strong and some areas where they're getting a little better. I think the overall picture to me feels like right now that moving into spring of 26, prices for American consumers in general will be much better. And there are retailers that are showing those signs. Walmart's, of course, leading the way. But there's many other retailers, whether it's TJX and the great success story of Macy's and The Gap, that show many retailers today are showing positive signs, which I think bodes well for the consumer broadly in 26.
Yeah. Those discount retailers came out with great numbers. Naveen, great to see you. Thank you so much, Naveen Jaggi.